In a surprise move, New Zealand has hiked interest rates by 50 basis points, the 11th straight hike, bringing the rate up to 5.25%. That's the highest level since the global financial crisis in 2008. The central bank is maintaining its pace of tightening to tame inflation, even as the economy heads towards a recession. Inflation is running at 7.2%, far above the bank's target level of 2%. Most economists had, though, expected the bank to hit pause after the nation's economy contracted in the December quarter and a destructive cyclone hit in February. Meanwhile, the Reserve Bank of Australia this week left rates on hold, even as inflation in the country still stands at 6.8%. For more on this now, let's go to Naeem Aslam, who is a CIO at Zay Capital Markets in London. Thank you very much for being with us today. So we've seen house prices posting a record fall in the year through March in New Zealand. And again, business confidence near its lowest levels since the early 1970s in New Zealand. So why the move?
That's a very interesting question. And at the same time, one would wonder why one bank will risk to a level to really redo all the hard work that they have done. Well, there are a number of factors. Let's look at the OPEC's decision, which is very much at the forefront for market players, because it seems like that the prices are more likely to be staying in the late 80s or early 90s price handle. So that has rattled the cage for a large number of central bankers who were trying to really push inflation down by increasing interest rate. Now they see that, okay, wow, interest rates are going, the oil prices are going to continue to remain high. That means inflation is going to become even more stubborn. Now, as you mentioned right at the top of the hour, that yes, the target inflation rate in New Zealand was 7.2%. Sorry, the actual inflation rate was 7.2%, but the target is between 1 to 3%. So there is a huge room for maneuver to face reality between these two particular price points, or between these two points that are there in terms of the actual inflation and the target level. So the central bank is really risking a lot by increasing interest rate by another 50 basis point, which in our opinion, perhaps may not be the right strategy given the current climate.
Right, even though we have reasons to believe that the return of Chinese demand may be a positive factor there for the Australian economy, New Zealand's economy. Do you think that Asia as a whole, Naeem, now is approaching the end of its rate hiking cycle as we've seen inflation continuing to slow down? And if yes, what would it mean for the rest of the world?
Well, inflation has eased off from its peak level, and now it has become more stubborn at current levels. And we see this across the globe. And in terms of a rate hike cycle, we also see a change in narrative in stance among central bankers around the globe as well, whether we are looking at the RBA, RBNZ, Fed, ECB. So we see this global attention of easing those particular interest rates, or at least pausing that rate cycle, which we think is again going to damage the central bank's reputation. Why? Because they are always chasing the curve. They're always behind the curve. When they should be using their diagnostic tools and in locating those particular problems well ahead of the time.
Naeem Aslam, thank you very much for your analysis.
Thanks for having me.
Now let's go to the top stories from around the world. The UK's privacy watchdog has fined TikTok almost $16 million for multiple breaches of data protection law. It claims the Chinese-owned app failed to protect children's data, allowing 1.4 million children under the age of 13 to use the app in 2020. It comes as a growing number of countries around the world move to ban the app altogether over concerns of privacy violations. Toronto Dominion Bank has become the biggest bank short, with almost $3.7 billion on the line. Short selling allows investors to profit from stocks when they go down in value. This puts the Canadian lender at the top of the list for the largest short bets in financial stocks globally. Short sellers have upped their bearish bets after 3 US regional banks failed. And Singapore is starting a $7.5 million fund to support international movies that help promote the city to global audiences. The fund will help finance production and marketing costs. It follows support in previous projects, including the hit 2018 film Crazy Rich Asians. The initiative will also allow local talent to participate in these projects set in Singapore. And that is all from business for now.